Have you ever tried to get health insurance and felt like you were under a microscope, like it was a full-blown investigation? Well, you are definitely not alone. In this explainer, we're going to pull back the curtain on one of the most important but also one of the most confusing parts of the insurance world. Thanks to the amazing insights of Dr. Sudendra C.G., we're going to break it all down and demystify this whole process. Ready? Let's get into it. So, let me tell you a quick story about a guy named Manish. He's a 48-year-old software engineer, and he figured, hey, I should get a health policy. He thought it'd be simple. Oh, he was wrong. He got hit with a mountain of questions, a bunch of medical tests, and in the end, a premium that was way higher than his friends. Why? All because his cholesterol and blood pressure were a little on the high side. He got so frustrated and confused, he just refused the policy. And his biggest question was just, why? Why is it so complicated?
Well, that whole complicated, frustrating process Manish went through, it has a name, and that name is underwriting. Now, it's not just a bunch of red tape or hoops to jump through for no reason. It's actually a really important, systematic process that matters a lot to the insurance company, and, believe it or not, to you too.
So, what is underwriting really? At its heart, it's basically the insurance company's detective work. They're trying to figure out how likely it is that you might need medical care in the future. This lets them figure out which risks they can actually cover, and, this is the big one, how to price that risk fairly. You can think of it as the bedrock that the entire promise of insurance is built on. Okay, so underwriting has two really critical jobs to do. First, it's there to prevent something called anti-selection. That's a fancy term for a situation where only people who already know they're sick try to buy insurance. If that happened, the whole system would collapse pretty fast. The second job is to ensure equity. That just means that people with a similar health risk pay a similar price. It's all about keeping the whole insurance pool fair for everyone involved. So how do underwriters figure all this stuff out? What are they actually looking at when they get your application? Well, they have a whole toolkit of factors they use to build a complete picture of you and the level of risk you represent.
So what's in that toolkit? Well, a lot of it is what you'd probably expect. Age is a big one, because our health risks just naturally go up as we get older. Your habits, like smoking or drinking, obviously play a huge role. But then there are things you might not think about, like your job. A construction worker faces very different daily risks than an accountant, right? They even look at your family's medical history for things like diabetes or heart disease to get clues about your potential future health.
The way they gather all this info is pretty structured. Step 1. It all starts with you, filling out that proposal form as honestly as you can. Then, based on your answers, your age, and how much coverage you're asking for, the insurer might say, okay, we need you to get a medical checkup. Finally, the underwriter takes every single piece of that data and starts to put the puzzle together.
All right, so after the underwriter has analyzed all your data, their next job is to sort applicants into different categories. Now, this isn't personal at all. It's a purely statistical process to figure out where you fit in the big picture of risk. And this classification directly impacts the kind of policy you're going to be offered.
So people are usually sorted into one of 4 classes based on their morbidity, which is just a technical word for how likely you are to get sick. If you're preferred risk, congrats, you're healthier than the average person. Standard risk means you're, well, average. Now, substandard risk is for people who have a higher risk but are still insurable. This is almost certainly where our friend Manish ended up because of his cholesterol, and that's why his premium was higher. And finally, there's declined risk, which is for cases where the risk is just too high to insure affordably. So once you've been placed into one of those risk classes, what happens next? This is where the underwriter makes the final call, but it's not always a simple yes or no. There's actually a whole range of decisions they can make. You might be surprised to learn that getting a flat-out no is actually one of the less common outcomes. A lot of people just get accepted. Some are accepted with loading, which just means you pay a little extra, maybe 25% more on your premium, to cover that extra risk we talked about. And others might get a totally different counteroffer. This just shows you all the different tools an underwriter can use. They can accept you at the standard price. They can add that extra premium, which is called a loading. They could also exclude a pre-existing condition. So, for example, if you have a recurring back problem, they might say, we'll cover everything except your back. Or in some cases, they might just postpone the decision for 6 months to see how a recent health issue plays out. Now, we've been focusing mostly on individual health plans, but it's really important to know that these basic ideas of underwriting get applied a little differently for other kinds of insurance. The goal is always the same, figure out the risk, but the factors they look at can change a lot. For example, think about the insurance you get through your job. That's group insurance. With a big group of people, the law of averages just kicks in.
The insurer knows that a certain percentage of people will probably get sick, so they don't need to do a deep medical dive on every single person. The risk gets spread out across the whole crowd, which makes it way simpler for everyone. It's safety in numbers.
What about travel insurance? Well, here, the biggest things are where you're going and for how long. A 2-week trip to a country with super expensive healthcare, like the United States, is a much higher risk for the insurer than, say, a trip somewhere with lower medical costs. Location really is everything. And then you've got personal accident insurance. With this one, it's pretty much all about your job. Underwriters literally classify jobs into different risk groups. An accountant working in an office, very low risk. A professional stunt driver or a coal miner, that's a much, much higher risk group, and you better believe their premiums are going to reflect that. So, let's bring it all home with this quote here. Underwriting can feel a little invasive, but its real purpose is to create fairness and balance. By accurately figuring out and grouping risk, it makes sure the whole system stays afloat and that insurance can be offered to as many people as possible at a price that's truly fair for their situation. Which brings us right back to Manish and that feeling of frustration he had. Now that we understand all this stuff, anti-selection, equity, risk classes, does the process still feel like a random hassle? Or does it seem more like a careful, necessary calculation? It's the hard work that has to happen behind the scenes to make sure that the promise of insurance is one that can actually be kept for everyone. So, what do you think?